All right, a very quick one. Need to know about all of you who are on our forum for AKASHX and then Tradelocker. Those of you who have just subscribed to Tradelocker need to know. The first thing is that you need to know how to navigate your exchange platform, right? And so what we use is Tradelocker. I've told you and I've sent you. If you're on our forum, you have been sent. Um, you have been sent what's called. You have been sent your credentials. Having been sent your credentials, you're going to log into Tradelocker. And so this is how Tradelocker looks like. I just wish I could see a different place I will log in. Let me just check. So very quick one, because I just want us to understand how this work properly. All right, so let's go. Okay, so let's just go ahead with what we have. Let's make do what we have. First, now when you are on the this is the trading platform. So let's say you log in. Of course, when you are logging into the Trade Locker, it show you demo and live. So if it's on live, you are going to switch to demo. Then you log in with your email, your password, and server. So server, they give you all of these things. Have a login. So you're going to see your interface will be tied together. So look at this thing I click here. That is the trade. So you have different icon or tab. So is um here is like when you need to trade. Okay, so let me just so this what I did here. One of the lovely thing that anyone will enjoy on Trade Locker, which I will tell you is very simple, is that you can do your analysis of Trade Locker. Very simple. So if you just know normal thing, and I've told you what you need to be using is support and resistance. I can tell you that you don't even need to go to Trading View. Are you hearing me now? You don't need to go to Trading View. Okay. So I think I'm going to do combination here. You don't need to go to Trading View. Trust me. If you are trading on laptop, you don't need to go to Trading View. So let's look at it very quickly. So if you look at it, the first thing I want you to do is to go to your settings, right? Look at your setting here. Come here and make sure all of these settings are done, like trading. So as from the beginning, don't enable this. Because if you enable this, once you want to trade, as you just tap, it won't waste time. So you may make a mistake to click and you enter trade erroneously. So that's why I will not encourage you put it one tap to trade, right? So then trade on chart. If you enable it, every of the trade you have traded, close trade, open trade will be shown. Let me just look at mine now. Look at mine. See all those trades I've entered. When I sold, all of them are showing. Okay, so that's why I always say you just need to take it off so that it will not disturb your chart. So then, basically, that's the first thing you need to do. Every other thing, I think you're good. So chart as price. So leave all of this one the way they are. So you're okay. So of course, when you want to log out, it's still the same place. You click if you're on laptop, look at log out, and then you'll be able to log out. So this is your navigation. So basic thing you need on your trade locker is on your trade page. Now, if I click this market panel, it will show your markets where you need to take trade. And so, but when you enable your market panel, your trading view environment may be too small. But if you know you can cope with it, why not? All right. Another thing you want to see is trading pane. That is where your trade is picked. So for me, you just click here to reduce it so that you won't see everything. Okay. Just click to reduce it. Okay. Now, next is you see position. The trader is running. Pending. If you have set a pending order, either to buy or to sell, they will be here. But you did not set anyone. Close position. Maybe any trade you close, right? You can see them here. All right. And then the profit you make, right? You can see all of those things. All right. Balance history, trade, order history, alert, all of those things, they are available here. Okay. Fortunately, I've not even set alert, so maybe we're going to be exploring all of those things. So you have the position. So let me click it so that you can see the page properly. I've not even made use of the alert. I think the alert is going to make sense. All right. So this is how your interface look like. Now, the first thing we need to experiment is very simple, right? Now, so this is desktop. So you're going to have a video that explains the mobile. So how to navigate on mobile. So now this is the, so here, the market where you pick order, different instrument you want to trade. But to make your trading view wider to see properly, just, all right, so look at it now. So where you pick order, so I will disable everything. Okay, you see now, I will disable everything. So, or if you just come over here and do like this, so you can see now, you can see your trading view properly. See, can you see? You just see your trading view, no stress, ladies and gentlemen. That make a lot of sense. So I'm just showing you because over time you may not even go to trading view. And let's do something very quickly. So here, you come up here where you see minutes. Just take your cursor there. If I click, it will show me timing. Just normal trading view timing, 1 hour time frame, different time frames, right? You're going to find them as it were. So if you want to go to 1 minute time frame, here is the candlestick pattern. So you have different pattern. If it's line chart, just want to see, all right, you can see. So why I say this is make a lot of sense is the fact that you can just me go here. Okay. Okay, is the fact that you can just do everything you want to do on one jump shot. Okay, so I change the candlestick back to Japanese candle. So look at it, it's back, and you can see, of course, it gives you some history. You can see I have a trade that is running, adjust my stop loss. So it was a training we did that I entered this trade, and I've closed about 2 positions of it. The other one is still remaining. All right, so now, so look at this place, it's indicator. If your screen is very small, it may not write indicator, so but you're going to see this Sigma X, which is a symbol of indicator. So when you tap on it, it will bring out. So I'm sure as a beginner, most of the indicator you're going to make use of is MACD, RSI, and moving average. Okay, because even your support and resistance strategy to ease your trade is when I will have to show you how you can enable maybe just 50 moving average, as the case may be, or if you're scalping 1 minute scalping, maybe 21 moving average, as it were. Okay, so now, so because you don't need to plumb your dashboard with so many indicators, as it were. So now I think I'm doing this because this navigation now supposed to just be very, very brief. Okay, now this is indicator and all of that. So let me hide. So here you can see where it shows this arrow down. If I show, it's showing you the indicators I have displayed. If I want to hide this one, look at this 3 dots, I click it, and look at hide, I hide. If I want to remove it, I just click it, and then what happened? Look at remove, I remove it. So I want to remove, I will just remove everything, right? So look at indicator, right? Show, okay? So look at volumes. You want to see volume, of course. A lot use volume to measure how the trade is still going well and all of that. But it block access for me, so that's why I just hide it. Look at it, hide it, so that my interface can be wide enough to see everything I want to do. So the next thing, I think this thing is going to take you navigation and taking trade on Tradelocker and as if on your trading view. Okay, so let's quickly go. Now we're going to go into how to select instrument. Where am I going to see where to type the instrument I actually want to trade? All right, so that's where it comes to play. Now you have seen the whole page. How do I now change instrument to select and all of that? So look at this pane. You know, I say market. Can you see market? So click on market. So as you click on market, you know, it has shown not only the USD JPY. So I cannot type, let's say I want to search for Euro USD. All right, Euro USD, you can see I will pick it. So look at Euro USD. I've picked it. So if I like, I will go back and click and see disable everything. So what I may want to do purely is analysis. Purely what I want to do is analysis. Okay, so I will just go. Okay, now this is where the job comes to play. I have taught how you're going to be using support and resistance trading strategy so that to make it very simple. Now, write this thing down because it's a full course I train. So, but I'm just to give you a summary of how you use it. So, you are going to be using support and resistance trading strategy, coupled with demand and supply zone, and cream with price action. Now, if you are a day trader, so the first thing you are going to do, look at it here. So for us to do this trade, I think I'll just go straight here because the first thing, so more tips on price action, support and resistance strategy. First of all, observe order flow and daily bias on 4 hours, 1 hour, 15 minutes, depending on what you want. If it's capping, your order flow should be on 15 minutes. If you are day trading and intraday, your order flow should be, your bias and order flow should be on 4 hours and 1 hour. So I'm not going to go to detail of trading to show you what trade all of those terminologies are. So, but when you talk about order flow, you're looking at where is this market going to? Is it an uptrend or a downtrend? You get it? So now, assuming you come in a day and you want to trade. Now, this is Euro USD. Perhaps I may want to look for a better instrument because I need to take a trade today on this. So probably I would love to look for another instrument that I perceive Euro AUD. So let me just, I don't trade all of those instruments. Euro card. Okay. Which one is this? Euro SND. Okay. AUD USD. Let's look at AUD JPY. Okay, amazing. So this is a fantastic trend. All right. I like trending markets. So now let's go AUD JPY. So now what I want to do in a glance, when you are going to struggle to know where market is going in a glance, don't trade it. I don't you can trade choppy market as you like, but I don't. So okay. So now if I even go on 4 hours, it just depends on what type of trade you want to trade. If I go on 4 hours, now for now, leave this one where it was coming from. But now, for now, this is an uptrend, right? For now, this is an uptrend. If I like, what you can do is that you can look at, go to your indicator and put moving average, right? I use moving average exponential and then put maybe 50. So how do I change it? Come here. So click on these 3 dots and then click on settings. And then I'm going to go to input and then type 50. All right. So I type 50. All right. So it's okay. I type 50. So these are an uptrend, right? So if you go on 1 hour, you're going to see, because if you're a day trader, you don't have too much business to do with so this is an uptrend. However, the market is a bit confused. Now, the challenge you may have, which this market self is not a favorable one for me. The challenge you may have is this. So you want to know in market, we call something market structure. And now I quickly want to take this, right? Let me take path to show you what you are looking for in the market. Where did this market start from? Here. So you move this way, it came down here, now move this way, now came down here. All right. So this is the next one. So what we're expecting now is a pullback, maybe from where it is or anywhere. So we don't know. Okay. So let's say we're going to pull back here, whichever way. So let's stop here. So now that is, this guy is an uptrend, right? And to enter market is that you enter market in different ways, either at a reversal or at a pullback and continue. All right, pullback and retest. So now let's look at this market. Should I enter this market? The answer is no. Why will I enter this market? All right, why will I enter this market? So support and resistance strategy with trade is very simple. Ordinarily, I'm going to mark previous day high and low. Let's go here. Today is 1st of May. So yesterday was 30th. So look at it. Invariably, Here was the highest on yesterday. So I demarcate it with a line because you want to trace support and resistance. So this is what you are still going to do on TradingView. Where is the lowest yesterday? Okay, this was the lowest yesterday for this guy. So you can imagine, as at the time you came in the morning, as market open and all of that. So this is when you are doing all of this, or before even the market open. So I got the high and the low of yesterday. And then other thing you want to get is maybe a swing low and a swing high, previous swing low, immediate swing low, and all of that. Let's just take this one too, even though it's not necessary. Okay, whatever affect this one will affect the other one. And so here, now because me and you are just coming now, so I will have to mark more important places. So mark this point, because we have left a particular zone now. Mark this point. So what are we looking at now? So this is invariably, okay, so we'll still mark this point. You know, you are trading support and resistance. Let's go. Okay, so if it's not clearing you, stop at the navigation. Later you can come back to it. Now I've marked all these points on my 1 hour time frame. Step down straight to your 5 minute, or you can go to your 15 minute to see, are there other areas you actually overlook that was not obvious on your 1 hour time frame, and but is obvious on 15 minutes. Where I can say is obvious here now is this one. So I may have to mark this point here, or actually here. Okay. So sometimes you may want to demarcate the major key level with red, right, and the one with white, depending, so that you know what you are doing per time. So now let's go to 5 minutes, which is the place you are supposed to take trade. Now, 5 minute entry, you know you are a day trader. So see what happened. Look at it. Imagine we said this was yesterday. Was it okay? Look at it. Yesterday high. Okay, this was yesterday high, ladies and gentlemen, and this was yesterday low, ladies and gentlemen. So that means, when did the market open today? Right, let's go on the first, right? Oh, okay, so that means we actually do not get the high of yesterday, because this is the 30th. So this was the high of yesterday. So, but this is a pivot point level. That's an important point of where market reacted to as it were. So this was yesterday high, right? And this was yesterday low down here. So now what you are waiting for is that, and thank God we've marked all of these other points. Now the markets, when did the market open? So the market actually opened and created a gap. This. So the market opened and slumped down. So I put this 50 moving average because it can guide you when you are trading with support and resistance, or scalping with support and resistance on 5 minutes or 1 minute as well. So look at it. The market came down to this point. So should I trade? So ordinarily, you probably want to trade it. But of course, this is where market just opened. I want to say the first 15 to 30 minutes of market open is not a tradable time. So, but look at it. Because of this 50 moving average to help you, the market actually came down and rally up immediately above 50 moving average. But what makes more sense, look at this, your point, key level, market rally. So now, one of the things you will want to really avoid is that you want to see how the market actually go above yesterday high and retain. So that means, to find an entry in this market, you will not trade all this point. This is like no trade zone. It's when you cross the yesterday high and retest it that you are looking for an entry. Now, this is the rule. Now, so what do I do? Well, you see that when we send signal in our group, we use one ruler to mark it. So let's say you are entering here anywhere at all. Now, so your stop loss, sometimes I love to be conservative, especially if it's in currencies. Now, so let's look at your stop loss. This is How many pips is this? 26 pip. So I always say, as a day trader, your stop loss can go up to as high as 30 pips, depending on what is it called? Depending on the lot size you are using. Okay, so we'll talk about that separately. So here we go. So 1:2 risk reward is your target. So let's drag it. Okay, at this point, so this is your 1:2 risk reward. So you are saying, if I can afford to lose 30 pips, I should make 60 pips. Then you let the trade run. And then fine enough, the trade has run, and then you are following again to mark, okay? You are following again to mark other important area. Market got to this point and actually stopped. This is an impulsive move. And then you mark it again as another resistance. Market return down, all right? You are still watching. However, one thing is that on 5-minute moving down, 5-minute market structure, so market has been coming down here. Sometimes I mark where it stopped and try to pull back again. So it stop here and try to pull back, I mark it. And this is how I mark it. I actually box it, right? So I use my rectangle and then mark it this way and extend it out. Now, so take note, I haven't marked this point. I expect the market to rally up and come down here and break and grab the liquidity and return. That's one. Two, yeah, and they continue to do that. Secondly, to fail not to touch that place properly, then I'm still looking for a buy. Or should just do a double bottom at that point. Here, it grabbed the liquidity. After the grabbing the liquidity, will you enter immediately? No. You have to allow it to come back to the region. And even in the region here, this was the first move up you wanted to. So conservative trader will wait for this high to be taken. And look at this high. This high has taken this high. So I haven't taken this. So I mark out this guy here. And I want the market to pull back, all right, for confirmation. But sometimes, as a sniper entry trader, oh, the market has returned back to the zone, and so you want to enter. So you probably will enter here, and then the market still return back there. So when you are entering here, what do? You're looking at taking the market long, and then this are engulfing, and then you say enter. Where should be my stop loss? The lowest that push all of this. All right, that is the manipulations, okay, or what we call expansion. Now, so 1:2 risk reward. There you go. 1:2 risk reward. Not that you cannot go more than 1:2, but if you want to do that, you have to, as a matter of fact, give yourself attention that, okay, this is what I want to do, and this is what I encourage. When you are entering position, you don't enter one. If I want to use one lot size, I will cut it into 10 places or 20 places so that you can close some of those trades. Now, look at it. If you look at, you get an entry here, that is to say, at this point, you are looking at this side, which align, and your profit is already taken. So the same thing, the market continue again after giving you the market continue. So this is the continuity we have had now here. Can you see that? So here, the market broke this high and creates another high, which is a very nice bullish market. Now the market has returned back. So sometime even before my confirmation, if the market return back to 50 moving average and start getting another move, what am I going to do? I will look for an entry and then my stop loss below here. So it helps you because 50 moving average actually help you. So after all of this, because it's very possible that you enter from anywhere here. So your stop loss is below, even at least you have marked this, is below this point. And 1:2 risk reward, let's look at it. So 1:2 risk reward is actually here. And this has done. Now you have come again. This market, as it is, what should I do? You do nothing because you want this one to pull back. So it can pull back and bounce on top of this, or pull back and bounce on top 50, 250, bounce upon 50 moving average. So that's what we're waiting for. At this point, you can't enter the trade because it has broken the structure. And normally, when the market breaks a structure, it's expected to pull back all right, for confirmation. So you retest after breaking the structure. And after all, this is like a displacement. So this displacement it did, it has to come and cover it. So I'm not going to be surprised if this pullback will come down to as low as this point. And if it's going to come there, and let me not complicate issue, there's a fair value gap at that point. So you have to wait for this guy. You can't enter long now, and you can't enter short, because you could short, it will just continue. So it's better you wait and let the market pull back, right? So the moment the market pull back to this point, then you are looking for an entry. So, and when should I enter? This is down where candlestick pattern have to set in. At this point, when the candlestick, so market has pulled back, what you want to have, maybe an engulfing candle or a pin bar or hammer, stuff like that. So you can see now that the market is actually pushing back for a correction. And if you push back here now and for a correction and now give you for an entry, even when you enter, you want to be careful at this, because this is another, can you see now? This is another potential resistance. Okay, look at it this way. Now, market could do something very funny here. So market could do this now. Instead of rallying back here and continue, it can come down here and now continue and failed. All right, failed to get back to this point. All right, or return back here, just grab this one small and return. That means the market is preparing to reverse. So it's a different message I'm going to give to you on that. So, but what are we doing? We wait for this market to actually pull back before we find an entry. So to me, I think Tradelocker is so amazing to trade. Additional confirmation you can add to your indicator may now be what? The MACD indicator, which confirm momentum in the market. Okay. Okay. So I will have RSI added. So some you can use RSI or you can use MACD. So let me quickly close this RSI and leave only MACD. All right. So look at MACD. So MACD, of course, if the market is not trending, MACD is going to give you a wrong signal. But there are things you need to know about MACD. Look at it. So this MACD now, look at it, is that it has three content or element. We have histogram, we have the signal line, and we have the MACD line. When the signal line, the MACD crosses below the signal line, it tends to be a bearish potential. And the histogram too should be showing volume momentum of selling pressure. And then you are looking for a sell. And of course, your price action should be aligned. Now, the same thing, when it got here, a bounce, then you want to look for a buy. So let's look at it. Look at MACD here. Now, this is the question you ask yourself. Should I sell? No, don't sell. What should I do? Very simple. Wait for it to pull back and look for a buy, because the markets are not trend. When you are not trend, looking for buy position, it will save you from the stress of a heavy drawdown that you are struggling to come out of. Does that make sense? Oh my God, finally, I'm getting out of this trouble. I'm getting out of this trouble. My goodness, this is not funny. This is not funny at all. This is not funny. Okay, so now that's exactly what to do, ladies and gentlemen, so that you can be under less pressure. Have you seen it now? So you can see that Tradelocker is amazing. Now look at it. You can say the momentum is getting weaker, however. So, but look at your MACD cross, even apart from your MACD, your 50 moving average, and apart from your moving average, your price action. Then, ladies and gentlemen, you have taken, it's good because you are a day trader. You can enter like 2, 3, 4, 5 times on that particular instrument until it's no longer juicy. You may look for another instrument at another time, especially, different instruments show energy at different times. Let's look at gold that I just saw that was doing what it was doing. Let's go back. So you go to market, look at market panel. So let's look for gold. Gold is called XAUUSD. Look at it. XAUUSD. Okay. So let's close the market. I don't want to have the market and I don't want to have the trading pain. Okay, so now there you go. Look at the market now. Gold have been choppy. Gold have been struggling. However, gold was a downtrend. How do I know? Let's look at it. Even with this 5-minute time frame, it's showing a downtrend. Look at your 50 moving average. It's showing a downtrend. But let's go to let's go to 1 hour time frame. Right. Ladies and gentlemen, look at 1 hour time frame. So what do you see? What's CS Dow? Can you see now? So this is pure downtrend. Okay. So you are below 50 moving average. And I only tell people when you are trading, even if you don't know how to check trend, market trend, or order flow, you can use your moving average to check order flow. Look at where the market was still in an uptrend. Have you seen it now? This is amazing, ladies and gentlemen. Imagine on 1 hour time frame. So look at it. Look at it. So even if you are a swing trader, let me take off all of this because I think they have been used for different purpose and all of that. So now 50 moving average. It's not as if you are taking trade with 50 moving average. It just edge you. Now look at we got the bottom here, right? Because if you look at it, the market came down here. And so you can see a major bottom here. Let's take it this way, this week, and then go back to this point. All right. So this is like a major support that you got here. Are you sure it's not where even this guy get to again and got bounced? Are you sure? Let's look at it. Yes, not taking. It may be. Let's look at it. Let's look at it. Let's look at it. I could just do this. Extend to the right. Very simple. And extend to the left. Okay. So let's leave it. So you can see. Oh, okay. That was previous one. Okay, that was the previous one. So this is where this guy actually get to and want to create a bounce. So if I take over here, right? Let's say this is a support, right? This is a support. Okay, so this is a support as it were. Now, so this market actually didn't get there properly. That's why sometimes I do not like when the market did not get to a particular key level to give me respect. So, but this is a downtrend. Are you seeing it now? Why? Not because of even 50 moving average, but because of the market structure. So this tend to be the highest, so which ordinarily I can even mark it with this again. All right. Now, here we go. The market came down here, and then saw which is the highest, this one. And then, of course, range. So this is not too juicy at all, right? So look at it. So the market began to range. Yes, the market began to range. So let me take mine. So this is where the market was not longer friendly, ladies and gentlemen. This is a range market. So you have to understand all of this. So let's take off all of this. So this is a range market. And sometimes I tell people, I said, if you don't know what you are doing in the market, just avoid a range market. Are you getting me now? Just avoid a range market. Good. So here you go. Okay. So this is a range market. So the market had been ranging for quite a number of days since on the 22nd. Now, for the fact that it's a range market does not mean you cannot trade it. Okay. So, but after the ranging, it broke below the range. So even when this market, if this market is going to go back now, so you are still going to have issues here. So even if this market, right? So look at your even your moving average, the market rejected and get dumped, got to the bottom of the range and lose, right? So you got loose, and now this is the struggle, right? So the market is still going to crash. Okay, let me not complicate issues for you. So you have actually marked this market now. We could actually get over here, or that 3.2, or just come to be rejected at 3.259 region if the market is going to rally up. Let's look at what MACD is doing, right? So MACD can mislead you in this case because MACD cannot capture a range market properly, and because it's not going to trend, it takes a trending market for MACD to function well. And see, can give you wrong signal at this point. But now, why don't I trade a range market? Now, these are the points you're going to get. Now, remember we have bugged this place now because it's range. At this point, you can't really say these are an up or down trend. So you have market up, down wall, and all that, just like Bollinger. So people use Bollinger Band, like that's what it helps you to do. Bollinger. Look at it. Are you see? Are you see Bollinger? So after the squeeze, you have an expansion. After the squeeze, you have an expansion. After the squeeze. Okay, so if you look at Bollinger now, it's still saying this trade, this market will be rejected here again at this Bollinger. Can you see? So Bollinger, if not after touching the wall, you're supposed to have a rally up, but which shows that the seller are in charge, right? The seller are in charge. So let me just take off this because when you pack indicator into your trading view, you get confused on what to do. Right. So now let's go. You have marked all of these. So let's go to 5 minutes. So going back to 5 minutes, you are going to find different area of importance. Can you see? Remember that range. Remember that range. You know, this is the range. That market was not good at all. It was just ranging and ranging and ranging. So, but even when you are using your 50 moving average, which I always say, when you are trading, don't depend on indicator. So, but you can see how the market was not really giving you what you wanted. Okay. So the market continued to range and range and range and range and range and range and range. So, but you can still find entry though. You know, this is already a range market. You are conscious. Having boxed this, see the market. So I always tell people avoid the range market. Okay. So let's, you probably will be taking trade, but you know, this is gold. It has a lot of volumes. Now, so look at it. So apart from the range here, you are having a double top here. Okay, double top. Then you remember you have boxed this place. When it trade to this point, you are taking your profit and it reacted to move up. And what's the reaction? This is like a support, move, grab liquidity, and return back. Then you are entering the market and targeting this high. Market continue to do sluggish, but this time around, the market poured down the acid. So look at it. So the market got up here. You probably have marked this point as a potential resistance. Now, if this place was marked as a potential resistance, now this, my explanation is good for somebody who is not jumping around. Okay? If you are trading gold and gold is not good at a given time, change time for it. Instead of trading at 1 hour or 30 minutes, trade it on 5 minutes or 2 minutes or 3 minutes. Now look and see what gold was doing, just ranging, and with the help of your 50 moving average too. But these already failed, right? These already failed. Then I'm very sure you probably may be taking trade anywhere there. And now when you take a trade, because I just want to simplify this as easy as possible. So let's say you have taken trade here and your stop loss, of course, is going to be above this point. And you are targeting 1:2 risk reward. or even if it's not 1:2 risk reward, you are targeting the wall of this. But of course, you are going to put it 1:2 risk reward while targeting when the market get there. Will it bounce? And of course, the market drag you for a very long time, right? Drag you for a very long time. I can assure you that you are confused here. Well, what will not make you to be confused again is the fact that the market got to this wall, but is still below 50 moving average, and eventually give you your profit. After giving you your profit, it continues. As long as it stay below 50 moving average, you are selling again, right? You are selling again. After this squeeze, drop down, you are selling again. Here, you are selling again. Now you become more conscious because it's like showing a sign that I actually want to move up. No, this is 5-minute time frame. But the move up, is it certain yet? No, it is not. Because here we go now. There we go. So all of this is like a potential support, and which you're now going to like, let's mark this guy. All right. So now this is like a support, but we have a rally, all right, and all of those movements, but still got bounce here, which is a sign that, okay, maybe it's preparing to go up. But as long as this market is concerned, the market cannot go up except you break above all of this region here. So most time, let's start this way. Okay, so let me take out the extension. Okay. Remember, as at the time the market was doing the dialing here, what you saw was this potential resistance before this came. And now, sharply, you have marked this and extended it here. Market got there. Of course, one of the things you need to understand, especially in a range market, let me tell you one thing. When you have a serious rallied up, all right, you expect, so this is a displacement. Are you hearing me now? This is what? A displacement. So you want the market to actually return back to the origin of that displacement. So before a good buy. So most good trader, having marked this, and you saw a very powerful displacement like this, forget the fact that the market was too bad because bearish. Now, after this displacement, you want the market to come back and actually do a nice buy. But this is the point. Because the market is bearish, that's why if I didn't miss the trend that after the displacement for a sell, or for a sell, then let's say we have a displacement here, right? So the market is going to rally back to the origin and now sell down massively. All right. So forget about that. So, but now this is support. So for me and you, haven't seen this again. This market rallied up and got to this and then got rejected. So you want to be selling, to be selling down here. After all, the market is downtrend. So we have this first attempt and then the second one. You'll be selling down here. And it actually makes a lot of sense. So if you sell here, remember, why were you selling? Number one, the market is a downtrend. Okay. It's a downtrend market. Then after this engulfing, here is your entry perhaps. And then because you may not be a sniper entry trader, so you are going to go above this week and then 1:2. Now, sometimes your 1:2 may not work. Let me tell you why it may not work. Because, okay, this time around, okay, the 1:2 actually work. If not, I want to look at this point as the market could get unbounced because of this displacement. So the market give you what you wanted. Now, it bounce again, you probably may be looking at an entry here. Now, making an entry here is risky because this is a downtrend, but the market is sluggishly moving. Now, the worst that will happen here now is for the market to struggle and get to this point and get rejected again. Come on, that's going to be very terrible. Then the market will reject and flush down. But this now will make a lot of sense. The market could get back here, right? If the market could get up here and break above this, then you want to be targeting all of these points. Okay, so look at it. Let's copy this guy. So there are two major key levels now that will confirm to us that we are over for the down move. So we have this point we are looking at and this point here. Anything that make us not to cross these two guys, forget it. You go nowhere. We are still going to be struggling. All right. But you can see your 50 moving average start trying to carry head up, but this is 5 minutes, remember? But of course, it's because the market, for it to have stopped the massive move down, but that was actually what happened here. I'm sure I took a trade here, and then that was actually what happened, and you're expecting some move. Now, this is the challenge we have as a trader. When you're too much busy with too many instruments, you won't be able to stay on one instrument that you can take the in and out. If not, even when you sell or buy and the market is against you, you will have been scalping within this region where the money you will have made will be so much. But in the process of jumping from one instrument to another, you will know when good thing has happened in the main instrument you actually were trading. So as far as day trading is concerned, if you have picked an instrument for the day, follow that instrument to the later so that you can explore as much as possible. I hope this is going to help you navigating Tradelocker. Remember, we have not even gone to the trading view, so it's a different class on its own. So please, navigating Tradelocker is very, very important and it's as easy as possible. Thank you very much and enjoy yourself. If you have any question, don't hesitate to ask us on the group chat and we can attend to you as much as possible. Thank you.